Okay, welcome back.
Hello.
Hi, Jumbeng. So I think today's company somewhat linked to I would say news headline that just appeared a few days ago, right? So if you guys are familiar or you guys have followed the news, a few days back, the LSS4 so-called tenders were actually announced. There were some big names actually that clinch some major deals for the LS4 project. So what is LS4? What is LS? Later we will talk more in detail. But if you guys have actually followed the news and are aware of LS4 or Solarvest, which is the company that we're going to talk about today, you will know that it is one of the big winners. Together with a few other companies, we will later show you all the so-called list of the companies that actually won some projects or clinched some deals with the LS4 lah. So something to do with solar, and of course, this is actually one of the huge trend that we actually see to be the so-called upcoming trends that people want to invest or even trade in, judging from the volume and the market sentiments revolving around this theme lah. So we thought, let's talk about one of the key companies that maybe most of us are aware of. So you have Solarvest today. So of course the tagline is quite interesting: turning sunlight into investment, something that is free, something that we get for granted every day. But can it be generated into a potential investment? Chuming, what are your thoughts on the solar theme that is revolving around us? Then should we look deeper as a potential investment opportunity?
I think for renewable energy field definitely is a field that will be very popular in the coming years. But then why we choose to actually feature Solarvest? I mean, it's also good for us to actually do some sharing on how there's actually multiple segment within solar or renewable energy industry as well. So you got people that actually do the manufacturing of the solar panel. Then you got people that actually do the construction of the solar farms and then lay out into a megawatt mega scale kind of solar farm. You also got people that actually provide those services that allow you to manufacture solar panel in an efficient way. For example, grid techs. So there are multiple segments within these things, and then each of it have their own uniqueness. That's why it's quite important to know all this before you jump into it, because there is this thing actually linked to renewable energy, and then you think this is a future, then you go into it. Actually, it's quite different from different segments.
Yep. I guess previously we talked about grid tech. So if you guys are interested to know more about grid tech, what is grid tech's difference with today's company, which is Solarvest, you can go to YouTube and search for our video on grid tech. I think the business model stays the same, just that do benchmark the so-called reputable websites or the annual report for the latest financials lah. But if you basically want to know, we've covered the grid tech, and today we'll go more into, I would say, end-stream part of the so-called solar value chain, where we talk about one of the companies, which is Solarvest. So can they turn some sunlight into investment, and can we actually profit from this kind of opportunity? I think we can proceed.
Yep.
So, Jermaine.
Okay, so I think before we start, also just a quick sharing about one of our initiative that we have kickstarted recently, which is a premium content that we are going to do by putting all the like-minded people into a private groups, right? So we have been working on a few initiatives, including the courses that actually talk on dividend related kind of investing strategies. So right now we have decided to actually come up with a premium content that we can offer it to you. So I think I'll hand over to you, to Jupan, to share what is the key thing that we are going to cover under this KayaPlus premium.
Yep. So if you guys know about how KayaPlus works, how KayaPlus actually analyze companies, we do a lot of reading, right? Basically, it can be ranging from software companies, EV companies, F&B, banks, whatever kind of business out there that intrigues us, that we think that it's interesting to take a look deeper, and after all that study, can we actually invest in the company? So of course, rather than just see for yourselves and hear from what our findings are on a Thursday night, just get connected with us on a weekly basis, on a daily basis. Whatever good articles we have read, we think that you want to also take a look into it, you can actually have that opportunity. We will actually share beneficial reading contents and materials inside this FB group. We can also do a little bit of healthy discussion. Of course, there will be a private sharing session also for those within the premium club. And of course, for those who have actually attended Stock Plus 2021, moving forward, Stock Plus 2022 will be a key component within this KayaPlus premium. So no more paying extra. Once you are a premium clubber, you get to access Stock Plus 2022 and beyond for free, just by becoming a member of club, premium club. And then of course, you also have bi-monthly kind of top ideas and investing kind of insights. So basically, articles that we think that we want to keep it premium for the clubbers, and of course premium access to stock analysts, and also for those who have actually joined us via the Dividend Gems, we actually will go through a chosen company by you through the Dividend Gems hurdle technology, and we'll report it to you, and whether you want to take advantage and take action, it's all up to you. But we'll basically run through the test for you. And last but not least, we figure out we have to add a little bit of content to all the loyal clubbers that have joined us. So there will be thematic events and webinars to up your investing game plan. So what are these thematic events? So basically, throughout the years, we will be actually coming out with a few thematic kind of sharing. So in the month of April, you'll be doing a whole day event on EV. So you can talk about what are the EV players out there, and not only just the EV, who are the components, who are the so-called supporting players that are actually also the key beneficiary of the EV momentum that is going to rise. And next, of course, in June, we are going to talk more in depth of the semiconductor stream, the upstream players, the midstream, and also the endstream players, see how all of them are connected with each other, and which of them are actually the more potential or high conviction investment potential candidates, right? And of course, we also have to remember that we are slowly inching towards a more digitalized world, how we buy things going online. So we also have e-commerce thematic sharing in the month of September. And to round up at the end of the year, we'll talk more in detail on cloud. Cloud can be very broad, from the infrastructure, from the platform, and also from the software that actually powers and our so-called productivity, and also how we actually manage our work and life as of currently. So this will be separate sessions. If you want to just pick individual sessions to join, the session will be $199 per session. But if you are actually enrolled as a premium member, you get to enjoy all 4 thematic sharings for free. So click on the link at the comment section to find out more on premium members, and we will see you soon, not only in the premium clubs, but also in thematic sharing events. So a brief disclaimer, the company that we're going to talk about is just for sharing purposes. This does not control you to buy, sell, or take any kind of a decision based on our sharing, right? So this is particularly, I envision what our world will probably look like in the future as we slowly inch towards having our electricity or our energy generated from the sunlight rather than relying on carbon fuel or other kinds of methods, particularly in the so-called tropical areas where we get abundance of sunlight, right? So countries like Taiwan or the European regions might actually use wind turbine generated electricity, but for us, I would see that this is potentially the kind of a scenario that we would see in the future. So you have lots and lots of solar panels actually helping us to generate electricity, right? So I will pass maybe the ball to Chun Bing. So we always get to see words like LSS on the newspaper. What is it all about? What does it stand for? And why is it currently such a big thing? And we keep seeing this on the news headlines.
Yeah, I think LSS, the one that you are hearing right now is actually LSS 4. Basically, it's a phase number 4, right? But then the keyword is actually LSS is referring to large scale solar. And then if you were to go into deeper, it's actually photovoltaic plant, which is directly related to all these solar energies. And then it's a plan that actually approved by the commission. If you see the one on the left, is actually referring to Suruhan Jaya Tenaga. So it's basically our energy commission that come up with the guideline to actually offer for all the big corporates or all the industry players kind of bid for the capacity that's been approved, right? And then so all these things, when you see this term called Suruhan Jaya Tenaga, basically something to do with your power or your electricity and so on. So this thing is actually they have the plan to connect it to all the transmission network that's available in Malaysia right now. So it's not just something that you lay out and then you do your power generation on your own. Let's say you have a factory, then you lay all this thing out. No, you are going to connect to the grids that is already inside Malaysia, and then all in all, this is a guideline that governed by SEDA, or by in full term is actually Sustainable Energy Development Authorities. So if you are people inside this industry, you heard of all these name before, and also different bodies.
Okay, so what makes a company, a potential candidate, or how do they actually qualify to bid for a large-scale solar project like the so-called latest one, LSS4? What are the criteria, Chun Bing?
Yep. So you see, it's very straightforward lah. So basically, it must be a local company that at least more than half of it owned by a Malaysian. I mean, owned by a group of Malaysian or a group of Malaysian, and then the whole implementation is all about optimizing all the other related economic activities. So I mean, there's a list of things, but all in all, they wanted to actually improve the power generation, or in another way, it's an alternative energy source, right? And then all these specifications actually put inside their RFP, or if your guys are not inside all these project contract bidding kind of industry, you might not be hearing this term before, but basically in short, it's actually called request for proposal. So they open for all that is qualified for, I mean, actually matches this criteria. You can come and apply for it. And then lastly is, once you get on this, you will be going through 21 years of fixed energy price throughout. So you build it, and then this is the agreed price upon. Yeah.
Cool. So it's 21 years, and so-called operators build it, own it, and then operate it, and basically sell back the electricity to the main grid, which is owned by Tenaga, right? And of course, the responsibility. So let's say you are one of the LSS, you're a developer, you actually got the tender, got the project. That's just not it, right? That just means that you actually secure the project only. But after that, it's the hard work, the real work that can actually start. So you also need to go and buy the land, or you must actually show that you have a certification that this land or this site that you have, or actually lease from someone else, actually pass all the relevant certifications to be operated or to be used to be operated as a solar farm, right? So you actually went into the LSS tender, you got it, but you still need to actually ensure that you do the necessary preparations, you have the land, so that all these kind of the solar farm can be constructed and built upon, right? And of course, not only that, you also need to obtain all the relevant permits, the right of way from relevant authorities, right? So if you are in different states, you have to actually approach different state governments and actually get the permits, relevant permits, so that you can actually proceed after you gotten a tender. And last but not least, you are actually going to be responsible to design the whole layout, right? Construct it, build from scratch, and then test it to see that whether it is generating the desired output or not, and then commission it and complete it, and then operate it, right? To a certain extent, if you actually want to continue to own it, or you can actually build the plant for other players or other companies. But this is basically the so-called responsibility. So it's not just getting the project in hand, then that's it. But of course, share price always move when the news break out that who is actually the winner of the tender. You would need to actually monitor time to time whether these so-called winning bids actually proceed with their project management well or not. And this will link us to the list of available winners of the LSS4 project. So you can see a list of very well-known company name here. Some of it we have covered previously, like K-Power, and some of it companies that previously did not have any experience in running solar or renewable energies, but also eventually turn out as one of the winners lah. But today we are not going to talk about all of them. You're going to just zoom down to Solarvest. So the I would say one of the more popular and more upcoming kind of solar related companies listed in our Malaysia Stock Exchange, right? So what is Solarvest all about? During their history and why people are so excited about this company that the company share has actually go up quite a bit.
So I think just a quick one. So it's a relatively new company founded in 2012, and then they are among the first batch to get some certification from all the bodies that we mentioned before. I mean, there's a few more called ISPQ and so on, but this is all the industry related bodies. And then they themselves actually own a 1 megawatt solar photovoltaic plant in Kedah, owned by them. And then other than that, most of their activities actually doing the construction for other players. I mean, for other clients and so on. Lastly, it's a very new company to the share markets. They just got themselves listed in ACE market back in November 2019.
Okay.
So I think it's a quick quick updates or quick glance on how their company structure look like. So basically, as usual, they have a holding company at the top that will represent them in the share markets, and then down there, there's different subsidiaries. Each subsidiary actually handles some different departments. So because they have a few activities, for example, construction of the solar farm, then it's actually belong to one of the company. And the rest is actually focusing on the consumer business, laying out all this the solar panel in your rooftop and so on. Then it's actually operated by another company. So they break it that way.
Okay. So in a brief overview, what does this company actually do, right? When you talk about solar, I mean, solar is so ambiguous and so big. What do they actually do in terms of the value creation?
Yep. So what they are doing right now basically is not manufacturing the solar panel, but they are like a main con. If you think of it, instead of actually building a solar farm, you build a properties or condo. They are like the main con. So they go from the project development. Let's say you have a project. I wanted to come up with a 100 megawatt solar farm beside Mid Valley, for example. Then they will come in and provide the consultation and develop the project together with their client. And the next part is a big chunk of their business. Basically, you will see this term quite oftenly in the solar industry of Malaysia. They are doing EPCC. So in PCC stand for engineering, procurement, construction, and commissioning. Technically, you can also link this with the construction of a condo lah. It's about the same thing. It's just the target products is different. And lastly, after they develop the whole thing, commission it, or in another word, they go live with the whole projects. Then they also provide the operation and also the maintenance activities. See them as a very simple term. They are like the main con, and then they are building the thing. The product they are building is actually solar farm.
Okay, cool. So basically, either a solar farm or to install a huge solar network onto, potentially rooftops of industrial and logistic kind of buildings, right? So one of the good initiatives that you can see here on the top left picture. So some of these actually are turnkey EPCC. So basically, they just provide you the starting from feasibility study all the way to commissioning, testing, and also running the operations, and also maintaining the solar panels to ensure that it is always in running condition, good condition, or they can also be eventually the key owner of a particular solar PV plant, right? But if you look at the breakdown, as Jumbing mentioned just now, EPCC stands almost more than 95%, around 96, 97% for the past two fiscal years. Then, of course, the other segments like operation, maintenance, and sales of electricity is just a small segment only. But who knows, after the so-called upcoming LSS4 and further large-scale solar photovoltaic projects, sale of electricity numbers can actually increase, because if they actually own the solar plant, you can see them actually generating more revenue from that particular segment. So who knows, we will actually have to wait for the upcoming news and also upcoming results of the company to actually see how that actually translates into the growth potential, right? So, of course, EPCC is just a very simple of saying that this is a company that has a particular set of skills that they can help you to solve something or to create something of your desire, right? So, of course, you will definitely come across this word countless of times. It's not just Solarvest uses this term. Other kind of engineering companies also uses the term EPCC. Just treat it as a kind of value-added skills for a particular segment that can actually help them to make money and become a business model for them lah. So it's just a very fancy word, but it's just a very simple kind of explanation. So after moving on, quite a simple kind of business model, nothing too fancy, nothing too complicated. And if you see or look at the historical performance of the company, you will see that by a quarterly basis, the revenue actually go up and down quite yo-yo. So it really goes up from a height of 102 million back in Q2 2020. Remember, that was during the pandemic, but this company still managed to get quite a significant number of revenue, right? But after that, when other laggards or other companies who are recovering from the so-called economy reopening, these companies suddenly reported lesser and lesser revenue, right? Because it is always on the hunt for new prospective solar photovoltaic plant projects. If they did not manage to secure any new projects, then of course the revenue will show you very lumpy kind of trends like what you are seeing here. And of course, you can see the profit margin isn't something that is quite to be proud of. It is always ranging at 6%, 7%, so roughly around 7% each kind of profit margin. If you know, because they are not the only solar player that offers EPCC solutions. There are other companies that do the same, and it always bounce back or ties back to the competition out there. If you're not doing something that is extraordinary, you're doing something that other people are also doing, then if you start to charge ludicrous margins on it, then you will see your competitors moving to your competitors. And this is where you actually lose your business and also see your company suffer. So they always have to be very efficient, and they cannot actually charge high amounts in terms of the margin. So maybe from a balance sheet point of view, what actually catches your eye here, Jumbing?
I mean, of course, the good part is ever since they have get listed, just a quick reminder, they actually entered the ACE market back in November 2019. So the one on 2018 and so on is all their historical result. And then, which means after they get listed, their asset actually growing. And the best part is also the yellow line is on the downtrend, which is good. I mean, overall, assets is actually growing, mainly due to the trade receivable. So they have a lot of contract and then a lot of things are coming in. The second one is also, of course, the debt get pared down on a year-to-year basis. Lastly, they also have quite a number of cash in their portfolios, so it's quite healthy. But then for a business that straightforward like this, it's like a main con kind of business. Usually you won't run far lah. But the worried part of it is the profit margin might be you won't go high lah. You will stay low. It's actually depends on how you are able to get more and more contracts. So this is the key, or we call it the KPI that we should measure against them, whether they can actually bring in real impact or real growth in terms of more and more contract. Yeah.
Okay. So next you go to the cash flow statement of the company. So you can see that the company actually has been reporting quite positive operating cash flow, meaning from their operations that they are running, they have been pulling in cash flow, which is a good thing, right? So it's always on a positive side, the blue line, the operating cash flow. But for the trailing 12 months operating cash flow, you can see here, it went down to negative 18, right? And just now we saw that how is it possible that all this while it has been healthy and suddenly it went down to negative 18. And back in the balance sheet just now, we saw that company actually have quite a significant number of cash and cash equivalents. So a huge chunk of that cash and cash equivalents is actually the sum of the cash that they have on hand plus the trade receivables. Those trade receivables are money that company is being owed. They have to go out and chase, or they are probably offering some very specific kind of payment term to their client or end buyer. So the money is supposed to be received by the company, but it hasn't been received yet. So from a bookkeeping point of view, that's why the trade receivables increase. And if the cash does not flow into the account, then your cash flow statement will actually capture negative. If the company continues to grow, continues to buy materials to run future projects, but the so-called receivables does not come in time, then there's a potential that you can see a negative operating cash flow, even though profits have been growing and revenue has been growing, right? So one thing I want to see for this company is like whether they can continue to reduce the receivables and ensure that the operating cash flow stays at the positive region. So that would actually make the company more healthy, right? And of course, the company also has been doing a little bit of investing activities ever since it's got listed. Of course, judging from the current capacity, it does not need to actually go on any heavy kind of capex. They basically do EPCC, and if you do EPCC, basically you buy the materials, you have a team of dedicated specialized worker, and then you just send your workers to a particular land, particular project, and then build it, construct it, and then that's it. You leave the plant, the solar plant to the rightful owner, or you continue to operate and own it. So there is no need for huge investment for this kind of business model. And last but not least, as the company just got listed in 2019, you can see that there's a huge cash flow coming into the company via the financing cash flow activities, which is the cash coming from the share capital issuance, right? So very straightforward. There are good points and bad points, or I would say slightly negative points on the company's cash flow management, but it could also be a one quarter kind of potential and phenomena on it. Like just coming quarters, just ensure that you see a positive sign for the operating cash flow. So pass to Chun Beng. Why is his company so popular among the investors, and what are the further prospects out there that can actually drive the company higher? I mean, the company has already gone up 200+%. Can it go higher based on the prospects currently we think or there is out there, right?
Of course, I think LSS4 did help diversify their current revenue breakdown, give them a room to actually explore the new areas. But of course, this one is actually fixed. You can actually put in the number and do the forecast. So this is the farm size they're going to get. And then based on the agreed price they're going to fix for 21 years, you can sort of forecast it already. So it won't have a lot of advantage against other company that won the things. So it's just another revenue stream in that sense. But of course, they need to put in the investment to set the thing up. And then inside got a lot of big name lah. Even, I mean, one of the biggest name that you should take note is actually TMB. Traditional energy player go into renewable energy. So it's a good play by TMB. But then if you take Solarvest as the talking point right now, of course, this is one of the new revenue stream. The next one is the global trend actually did help to speed up the adoption of solar or renewable energy across, I mean, the world. Not only Malaysia, but China, US, everyone is talking about this to fight against climate change and so on. And of course, I think one of the prospect is they just got listed. The past 1 to 2 year performance has been great. That's why it sort of can justify the high PE, because people are expecting them to do the same for the coming years. But whether it's true or not, something that we really need to take a step back and think. Is there, I mean, they have any unfair advantage against the other player that can do the same thing? Can they continue to secure big contract? This is all the uncertainty. Yep.
True. And of course, you also have to really dig deeper, go and read more of the analysts. How will LSS4 actually impact the upcoming earnings of the company, right? What are the margins like? What is the estimated EBITDA like, or the margins like when these companies actually secure the LSS4 projects, right? So it also will take time for the LSS4 to get constructed, commissioned, etc. There is still quite a little bit of time where things can actually turn out better or turn out worse. So just keep in mind that winning the contract is just the first part of the story. There's more parts of it coming, and you have to really take a deeper look and take a closer look as the progress slowly unfolds. So last but not least, we talk about how Solarvest actually going through a very good time, right? That it is still growing. Revenue is going close to 100+%, and the global trend seems like we are going to adopt sunlight solar energy more in the future. But of course, there's also risks. If you look at the so-called margin, historically, it has always been low. It's lesser than 10%. This company is actually commanding or generating hype because of the revenue growth and not because of the margin. So as you can see also, historically, on a quarterly basis, the revenue can go up and go down. It goes down if the company cannot expand its order book, right? If you manage to expand, then you can see a sudden jump in the revenue, and that is also where the prospect and the so-called hype on the shares actually come into place as well. So margin will be a concern going forward. And of course, it is a contract-based business. You will see fluctuations. You tend to see fluctuations as it's still a new and growing company. And of course, they do not actually have a sustainable kind of mode. Basically, you can see of all the bidders for the LSS4 projects, they are not the one that actually got the highest number. It is evenly split, even among the other players as well, like Tenaga, Renju, K Power, and K-Land, and also Tan Chong Motors as well. So it's very congested and high competition, even though we talk about how prospective and promising solar energy is going to be, but they are not the only fish swimming in the ocean, and that does not make them the whale or the shark, right? They could probably be one of the smaller fish out there, but maybe the fastest swimming fish, and that is why the share has been actually growing very fast together with the company's performance. Right, Junbei. for a company that is contract based, but has ample potential and growth, judging by just 2 years IPO history, numbers wise, does it convince you?
Yeah, I think maybe they chose a very smart name that link them straight to solar, because the company name itself is called Solarvest. I think it did help to push up the share price, but to be honest, a contract based company at this kind of PE for me is very, very high. The only thing that can justify back is their earning growth per year. So you use the PE and actually divide it against the growth, then you get a PE to growth ratio. Then maybe okay lah, not so high, but can they get let's say 100% revenue, not revenue, profit growth on a year-to-year basis for the continue, let's say 2 to 3 years. If it's not, then you really need to take a step back and think, why is it so high? But of course, for me, I think their name did help to push out the share price, and beside that, I think undoubtedly after their listing and then the performance they managed to put in for the first financial year ended is actually quite good. But the second and third, will it continue with the same thing? We don't know. But one thing for sure is by getting more revenue, they are actually sacrificing some of their margin. So you can see a slight dip in the profit margin. So PE is all about profit, not about revenue. So this is something to take note.
Yep. I think I wholly agree with you. But of course, if there is still potential in the revenue growth, if there's some way down the road where Solarvest can actually tweak and improve on the operating margins and operating profits, that will actually spur and increase the earnings and also the ROE, right? So it all depends on how the company is being run. Of course, we know that on a top line basis, solar energy will be one of the key hot trends in the coming years. But how do you run your business more efficiently, churn up more profits, and show that the profit margin can improve, and eventually that would be one of the key factors that could actually drive the PE ratio higher and the share price higher. 2 cents worth of opinion. So I think it's a very straightforward company, EPCC, just particularly functioning in the solar industry, right? So that's why you have a little bit of hype and a little bit of optimism for the company, which is why it's trading at a PE of 80%, 80 times, right? So the company started off IPO around below 1 ringgit and went up all the way to 2 ringgit 60 cents. This is not a share or company that I think got really impacted by the COVID-19 sell down back in early last year, right? Or almost 1 year ago. So nothing has impacted. The share actually went on to break new highs and is still currently hovering at the historical high, right? And yeah, I think that's all about one of the so-called beneficiary of LSS4, Solarvest, EPCC beneficiary riding on an upcoming solar business trend. And that's all for the sharing, and we will actually go on to the question section. Right. So I don't think there are many questions also. Maybe Solarvest is a company that most of you guys are familiar already, and I personally think that there really isn't any huge info that need to dig deeper, right? So I think okay, this is a very good question. Why is CY Park valuation always the lowest? I really haven't gone very deep yet into CY Park. But previously I did study a little bit. I did look at the numbers a bit. I don't like the numbers CY Park is showing, particularly for the cash flow, right? So CY Park is one of the company, at first from the income statement point of view, it looks fantastic. It's growing in terms of all the aspects. But when you look at the cash flow, it is really the receivables and also the operating cash flow does not tag on to the income or the profit growth, right? So when you have this kind of deflection or when the operating cash flow does not trend against the profit, that means that the company is reporting profits on an accounting basis, right? Once you finish a job, you actually book it, your revenue, but the cash does not get collected. So that bound to raise a little bit of eyebrows and some anxious questions from retail shareholders like you and me. And maybe due to that reason, CY Park is actually traded at a discount compared to the peers. Does that mean that this problem or this kind of issue only lies with CY Park? Maybe it is inherent in all these kind of project-based companies. So you really need to go down deeper and study the company. How are these companies actually getting paid for the projects? Because projects can last for 1 year, 2 years, significant amount. Yeah. Do they get paid for every percentage the project is completed? Say, for example, 30% complete, you reach a milestone, then you get paid 30%. 60% reach, and then another 30%. And then once you finish 100% of the project, then only you get paid subsequently. Or is it a one lump sum kind of game plan? So you only need get paid after you finish 100% of the project. So what is actually the payment term between these EPCC companies against their buyers or against their clients? That one you have to actually look it out. But if you look at how Solarvest actually reported one-off kind of negative operating cash flow in their latest quarter, I tend to see it as an inherent kind of threat, or I would say inherent trend within the EPCC business, right? You do your job, I actually go into a contract review, and once the job is finished or certain key milestone is hit, then only you get paid. So there will be a period of time, say 1 quarter or 2 quarters, when the project does not hit a certain milestone, then you do not get to collect the cash, and there's no operating cash flow or lesser operating cash flow going into the company, right? So maybe due to that reason, CY Park is showing these kind of problems or issues, and that gives it a discounted kind of valuation. Okay, did you guys dig up any solar related companies that in Bursa that have higher profit margin than Solarvest? Okay, this is a very good question.
CY Park, yes, sir. CY Park is having higher profit margin.
Okay, so yeah, on an accounting basis, you report a higher profit margin, but in terms of cash flow basis, the operating cash flow does not trend together. So bound to be question asked from retail shareholders. Do you want to actually just judge a company based on income statement, or you want to look at it as a totality? Because if the cash flow does not come in, then the company will actually have to undergo debt financing or equity financing. So CRPI is one of the company that actually has a dividend reinvestment plan. You don't get your cash dividend, but you actually opt to reinvest your dividend by getting more shares, and the company keeps your cash and then run whatever expansion or whatever operations that they need the cash, right? So you really have to take the cash flow aspect as well, and analyze and compare all the companies out there. There are so many unlisted solar EPCC players in our local market. Why retailers only like Solarvest and Samaiden? Because these are the only choices for you to bet on an upcoming trend, right? Of course, there are other companies who actually gotten the LSS4 bid, but if it's a new name, it's a relatively new name, and the growth tends to be at a higher percentage against the other players like TMB, like Rand Hill, or like CY Park, then of course the retailers will want to ride on a new name, a newly minted company in the prospective segment, and then try to earn some quick bucks based on the share price fluctuation. Okay, Hanafi Basri, seems like Solarvest revenue source mainly comes from new projects. Yep, this one we agree. Will retail customers be potential source of revenue in this near future? This one I think is a very interesting question. It bounced back to asking us, will we actually consider to liaise with Solarvest as a company to build solar panels on our house, right? I think some of us out there, we actually do that. I have my relatives who actually install solar panels on the roof and then, sell back the electricity to the main grid whatsoever as an investment vehicle lah. But I don't think I see it actually hitting a kind of saturation point or the sort of tipping point where a lot of people are doing it. But I don't know what about your thoughts, Juming. Will you actually consider this kind of investment? I mean, generate your own electricity, use it, and then for those extra one, you sell it off to TMB main grid.
Ultimately, all these things is down to the mathematics, right? There was a big boom about people laying solar panel on top of their rooftop. I think because last time they got a very big initiative by the government called feed-in tariff, meaning you put in, the government, you subsidize some of it, and then you get the fixed return throughout the year of subscription. I don't know what is the exact year, but then this is the rate that you're going to get. But of course, also bear in mind, I'm not sure what is the latest, efficiency that each solar panel have. Back in my day, when I was a university student, I like doing all this research, and my studies also related to this when I do the engineering course. So that time, for solar panel, the lifetime is actually about 25 years. You will drop slowly. After 25 years, you can actually throw it away lah. It's not worth keeping it. So all these things you need to put into the equation. But I believe now should be longer. And securing a fixed a rate from the main grid, all those things is very important. If you follow the fluctuation of those things, it's kind of tough, and bear in mind it will drop. So this thing back to mathematics, I think now, of course, the mathematics is not that super attractive. That's why people are not going to it, because the investment take time to return. Literally, you buy the solar panel, which is quite expensive, and then throughout the year, slowly, you turn sunlight into investment, yes, but then it is quite long. So a lot of people actually lost the interest because of that. But last time, feed-in tariff giving very, very good rate. That's why it makes some difference. But Solarvest have this segment of business. If you check out their website, there's something called rooftop solar. So this is the thing that they try to enter, but very small. I don't think it's more than 2%. I think maybe 1% or 0.something%.
Yeah. But it also bounce back to the question just now David asked. So there are a lot of unlisted solar EPCC players. Personally, I also come across a lot of unlisted kind of Sdn Berhad companies doing EPCC. Basically, solar panels, you can source them from China, right? So you just need to actually have someone from an older industry. They wanted to set up a company, and it's easy to actually find someone who to set up an EPCC company. You procure the components, the photovoltaic panels from China, and then you can set up a company, and then you just dish out your consultant services and also the EPCC kind of process. So very, very competitive. So in the end, all solar power electricity IPP sell to Tenaga, and Tenaga is the solely can distribute electricity in Malaysia. Yep. And do remember that just now we just came across that the so-called power purchase agreement is on a fixed price. So what Tenaga buys from you is going to be fixed, but what Tenaga sells to us 5 years, 10 years down the road can be increasing trend, decreasing trend, right? So just take note of that kind of potential risk also lah. So we solar EPCC player tend to have higher liabilities. How can we evaluate their ROI based on their warm project scale? What you can do is actually track their so-called liabilities and receivables on a ratio basis, right? So just ensure that the ratio does not suddenly deviate too much. Say, for example, if the revenue or the profit grow by 10%, your trade receivables should also grow in tandem 10% only. It cannot go by 20% or 30%. So that one is too much. You actually book in more trade receivables than your revenue and profit growth. That means that you're not efficient in terms of collecting your trade receivables. Same things to your liabilities and all these kind of efficiencies when you come running your business. So there's no key guideline, key number, golden number to actually fall upon on. Basically, you just have to tabulate whether you see a deviation in terms of trend and compare within companies and companies. Why potentially Solarvest is better in terms of trade receivables versus, say, for example, CY Park, or what kind of companies are more efficient in managing all these trade receivables and also their liabilities. So it's always a very relative kind of comparison, like to evaluate the company performances. Can you share your views on JuJuR? Is JuJuR a gem or just a stone? Probably we will touch base more on JuJuR in the coming weeks if the so-called theme on solar and renewable energy continue to be a hot topic. So I think JuJuR is also one of the companies that previously were quite competitive and quite well known before the solar trend actually came up. So potentially JuJuR could be a more well-rounded kind of renewable energy company, and potentially we will look a deeper look in one of these weeks. Okay, is majority solar company have huge debt? I will not say have huge debt, but it will be more challenging to manage the liabilities and also the cash flow of the company, right? So if you look at, we covered K-Power. We also just now answered a few queries and opinions on CY Park. So based on these two companies and coming to Solarvest, I already tend to see a kind of trend where cash flow wise, from a business point of view, potentially a long tenure and unfavorable payment term to this EPCC company can impact their operating cash flow. And once they impact their operating cash flow, they need to come up with some kind of idea or measures to ensure they have sufficient cash to run the business. So what does K-Power do? They held on to the cash and then they give bonus issue. So that's where you have your share split and bonus issue in the early part of the year, right? And for CY Park, they actually embark on dividend reinvestment plan. You get the choice to actually reinvest your cash dividend and get share, so the company keep the cash and run their businesses. So maybe Solarvest actually also did bonus issue earlier. I think last year or early this year. I think last year. So this is some of ways that companies still continue to reward shareholders, but the cash does not get distributed out, but stays within the company. So the company can actually have the cash buffer to run the business. So I would say that maybe it's an inherent kind of trend for EPCC players lah. So just ensure that the company does not let the debt bomb explode, then we'll be fine. Okay, I think that's about it about EPCC player Solarvest. Exciting prospect, but of course not the eventual clear winner in the solar race, right, JuJuR?
Yep. I think maybe it's worth for us to study further. But LSS4 definitely bring up the attention of people into this industry. So hopefully we give you a perspective. Solar industry come from different segments, and different players contribute differently. So don't because they are tied to solar industry, then you think they are the renewable energy players. It can be just as good as, for example, Solarvest, they are just a main con. In short, so all this you need to take note.
Yep. So yeah, I think if you want to learn more, discuss more, or even share more articles related to solar, EV, or whatsoever topics, you can join us in our exclusive premium content and private group, the Premium Club. Links at the comment. And of course, if there isn't any other questions, I hope it was a beneficial sharing. And we'll see you next week, same time as always, Thursdays, 9 to 10 p.m. on Not So Late Night Show by Kaya Plus TV. So take care, guys. Good evening, and we'll see you next week. Bye-bye.